Today we're going to discuss understanding Top Gun trading market reaction zones, examining support and resistance trading, and supply and demand zones in day trading. Welcome to Top Gun Trade Zones. I'm Dana Shute, founder of the Top Gun Trade Zones and Top Gun Trend Trading. As a veteran trader with 25 years of professional trading, from the floors of the Chicago exchanges to electronic trading and portfolio management for major firms, including Goldman Sachs, to working with quantitative engineers on advanced trading systems, I've seen all aspects of trading. That work is the basis of the technology and methodology that led to creating and refining Top Gun trade zones, or market reaction zones, which I feel is the most accurate name for these zones. In this video overview, I will quickly review several concepts, including supply and demand zones, as well as support and resistance zones. We will delve into their differences, their importance in day trading, the factors influencing the selection of trading zones, and the most effective strategies for trading them. While our market reaction zones are far more advanced, this overview will provide you, as a trader, with the reasons our zones are so effective and critical to traders. Okay, let's dive in. First, let's discuss supply and demand zones. Supply and demand zones refer to price levels in the market where significant imbalances between buying and selling pressures occur. These zones represent areas where large buying or selling orders are present, leading to a temporary imbalance in supply or demand. Supply zones are areas where selling pressure exceeds buying pressure, causing prices to fall, while demand zones are areas where buying pressure exceeds selling pressure, resulting in price increases. These zones are visualized as horizontal areas on a price chart. Now, support and resistance zones. Support and resistance zones are specific price levels where buying or selling pressure is concentrated, causing the price to stall or reverse temporarily. Support zones are levels where buying pressure is strong enough to prevent further price declines, while resistance zones are levels where selling pressure is strong enough to halt upward priceward movement. These zones are represented by horizontal lines on a price chart. Okay, let's talk about the differences between supply-demand zones and support and resistance zones. Now, the key difference lies in their underlying concepts. Supply and demand zones focus on identifying imbalances in buying and selling pressure, while support and resistance zones concentrate on price levels that have previously caused reversals or stalls in price movements. Supply and demand zones are broader areas, while support and resistance zones are specific price levels. What's unique about Top Gun trade zone reaction zones is they incorporate characteristics of each, as well as other factors such as proprietary indicators, volume and profile analysis, and range analysis. This makes our levels that much more complete and reliable. Now let's discuss why supply and demand zones and support and resistance zones are so critical in day trading. First, price reaction. Both supply and demand zones and support and resistance zones play a crucial role in day trading, as they often act as magnets for price. Traders observe these zones for potential entry, exit, and target points, as prices tend to react strongly at these levels. 2. Market psychology. These zones represent areas where market participants have previously shown interest in buying or selling. Traders use this information to anticipate potential future price movements and take advantage of market psychology. 3. Risk management. By identifying and trading at these key zones, day traders can set predefined stop levels and manage risk effectively, as these zones provide clear reference points for placing stop orders. 5. Determining factors in selecting zones or levels to trade. This is what we consider when we're looking at which zone to take. Historical significance. Levels that have been respected multiple times in the past tend to hold greater significance. These levels are more likely to attract market participants and exhibit stronger price reactions. Next, there's the confluence of indicators. By combining in supply and demand zones or support and resistance zones with other technical indicators such as trend lines, moving averages, oscillators, other types of levels can also strengthen the validity of these levels and enhance trading decisions. Let's talk about effective strategies for trading support and resistance areas. First, regarding entries. Traders can enter trades when the price approaches the support and resistance zone and shows signs of a potential reversal or breakout. This can be done using limit orders, market orders, or pending orders. Regarding exits and targets, profit targets can be set near the next significant support or resistance level, trading from zone to zone, or they can be used to scalp. We discuss those in our, once you are a member, and in our course literature, all those different options are discussed. Alternatively, traders can use trailing stops or employ technical indicators to help identify potential exit points. Importantly, let's look at stop levels and risk. Stop level orders should be placed slightly beyond the support and resistance zone to allow for minor price fluctuations. Traders should determine their risk tolerance and adjust position sizes accordingly. And this is when we talk about things such as R, risk versus reward, which is commonly known as R, that we would examine more closely and you'll learn more about. That all has to be done before you even place the trade. Now, as a member of Top Gun Trade Zones, you will learn multiple methods of entry and exits while using market reaction zones. You may prefer one over the other, or changing the method slightly depending on price action, volatility, and other factors. Additionally, we use MRZs to help place directional option trades that take advantage of these key MRZ levels, along with our analysis of order flow, average daily range, opening range, and other factors. So let's point out a couple of factors or nuances, if you will, of what you will learn trading Top Gun trade zones. On the chart here, you can see a NASDAQ session from start to close with that day's zones in a gold tone. If we look at just some of the movement on that day, we have, turn to my annotation here, we have a zone, 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 zone. Now, this is the first hour of trading, and this is basically the opening range. This is one of our proprietary indicators that helps predict what the session is going to do and what to expect as far as that goes. We have up here the average daily range, which updates as the day goes on. Since this day was completed, there's 198 points of NASDAQ. So in this, you can see I will initially just point out points of how the price reacted in these zones, and you can see there is some good reactions into these. And now it's not blindly you just jump in and trade it at every zone. That's not, I'm just showing you that there is some significant movement and reaction in these areas. And again, there's a lot of information that goes into these. It's not just simple price components. There's a lot of different information and proprietary information that goes in this. That's why we get these type of reactions. So let me clear that and talk about something that you might not even be aware, how you can look at just a few factors. On this day, there happened to be a considerable divergence here. So this divergence here into the zone was a major cause for a major setup for a reversal, and you can see the significance in the dramatic drop we had from there. So learning about things like divergences, and I've been trading these for 25 years, and I learned from Gerald Appel, who invented the MACD. So I'm pretty adept at this. I've seen it all, and I know all the little nuances. But you see this kind of setup. This is where you vary your bet size. You don't just take your standard like, oh, one lot or 5 micros or something. You need to learn just like a professional gambler, a professional poker player varies the bet. A professional blackjack player varies his bet when the odds are in his favor. Same thing with a trader. You learn to vary your position size based on the odds and the other factors that you're looking at on that day. Next, we can look at something like trend lines. Now, people think they know how to draw trend lines. I've been doing it a very long time and I know a lot of nuances to it. And this trend line here pulls back into this zone. So you have that confluence of this pullback into support in an uptrend, and that would be your long. But not just that, the more you learn and the more you are a member, you'll learn all these little nuances. I can tell you right now, and I'm not even, that this is probably about a 50% pullback of this move. And people who say Fibonacci's don't work don't understand the human condition and the trading brain. I will tell you, because they will work to the exact T. So there's that move. There's the 50%. It intersects or bisects this trend line. You should be all over this. This is like a bet the farm type of trade setup. So to understand that, the more you're around, the more you learn. Like that is an amazing trade setup. Now clear that, and I'll remove. Well, I'll leave that in there. I'll get rid of this Fibonacci retracement. Now, let's take a look at a fib extension. Fibonacci extension from here to this move down to here. So this is lining up with this pullback. So as soon as it comes out and starts up, you draw that in there. There's your target. That's your initial target, 61.8. And then if we were to continue higher, but that would be a great initial target. And you can see we actually reversed out of there, and that was what set up that divergence. So all these factors you learn to start watching for and seeing in real time the more experience you get. And these are all things, as a former fighter pilot and test pilot, you learn to trust your instruments, you learn to trust what you're seeing that shows you actually data and information. You don't trust your feelings or your gut, or else you're going to die or blow out your account in this case. So that's another setup there. Then we have range analysis. Range analysis, here's the opening range, the first 60 minutes. Look at what we do here. We pull back to the opening range high, the OR high, and then we bounce off the OR high. If the more you know how to use that, and this is the opening OR mid, so this is the midpoint of this range. This is also acts as support. So what do you think when it's coming down here after a big pullback on an up day off a divergence? This is probably like the 70%, 62 or something in here, but this would be an area I'd be looking to get long. And people think VWAP is the be all end all. Well, when you're in a sideways movement like this, it's just going to slice back and forth through that. Those are not the meaningful areas. If you were buying and selling in there, trust me, you got chopped up. A lot of people lost money in here because they didn't know what they were doing. This is all things that you learn. The last one I'll cover just real quickly is volume profile or volume analysis. Over here we have the profile. This is that profile for that day. You can see this would be the volume point of control in here somewhere. Happens to line up just in front of VWAP and near this zone. So where do you think you're going to end up hanging out most of the time? Same thing when you get down to here, which is on the edges of that, then you're probably going to get into support areas. These are all things you'll learn. So let's move forward. I just wanted to show you a little bit that Our indicator package, we have a few of them. Most of them are proprietary, but they're designed to work together. This is actually part of the indicator 5 pack. It's the Trader's Edge package, and this is all included in there. But these are just a few of the setups and confirmations that I see and use every single day in my private proprietary trading room. And I've taught these to many aspiring traders, and the vast majority went from struggling to profitable very quickly. And I'll tell you, you can be the most disciplined trader there is, and people get all focused on that. You can manage your emotions, you can read all about trader psychology, you can have the best stop and trade management, you can do everything right. But if you don't have a proven trading methodology with a bona fide edge, you will not succeed as a trader. I promise you. But on the other hand, if you have a proven method with an edge in the market, you can still succeed with just decent risk and trade management, because that can always be improved. You need that edge. A trader with a poor losing system cannot and will not ever make money consistently in this business. So let's summarize what I've covered here. We explored the concepts of supply and demand zones and support and resistance zones in day trading, and how we combine all those factors into effective market reaction zones. We learned that supply and demand zones represent areas of buying and selling imbalances, while support and resistance zones indicate specific price levels typically. We learned that you must have a proven profitable trading methodology, or you will always be chasing your tail and funding new account after new account. And one additional promise I'll make: once you become a member of Top Gun Trade Zones and use our indicators and zones daily, you will wonder how you ever traded without this information. I guarantee you. I hope to see you as a member and join us every day in Top Gun Trade Zones. Thank you.